Ben ritrovati martedì mattina sul floor del New York Stock Exchange. Solo ieri abbiamo visto i volumi più bassi dell'anno, ma ancora quest'oggi vediamo pochi scambi qui a Wall Street. Una settimana comunque sapevamo sarebbe stata piuttosto calma, è quella che precede il Labor Day. Ne parliamo con il mio ospite qui sul floor, che è Mark Otto, Designated Market Makers per Knight Capital Americas. Mark, thank you so much for being with us.
Thanks for having me back.
So Mark, I was saying that yesterday we saw the lightest volume of the year. Today is not that different. We knew that this week would have been light, but this light?
It certainly is the end of the summer, isn't it? So we're coming into a holiday week, and it seems to be the market built up. The S&P has been holding above the 1400 level for a few weeks now. It seems as though you could get this feeling that the market's sort of, the momentum sort of stalled there, and they're waiting for obviously Jackson Hole. So I think that might be the next catalyst for whichever direction the market's going to take from there.
Well, a lot of people though now are kind of downplaying Jackson Hole a little bit. I mean, we know that Mario Draghi is not going to attend, so we're not going to hear his speech on Saturday. And a lot of people are just predicting that it's not going to be a big deal for Ben Bernanke. He's not going to announce anything.
That's a strong possibility. We are seeing both sides of the coin. Obviously, I think the market's built up to this level in sort of speculation that not only the U.S. as far as stimulus, but they're looking at globally for stimulus. So on the back end of Jackson Hole, I mean, in the first week in September, we're also going to have the ECB policy meeting. So some of that could be sentiment towards that as well. So that's.
And of course, the week after, the Federal Reserve will announce eventually his decision.
Yes, that's really if a hint is given at Jackson Hole instead of a commitment, then obviously people will be looking at September 13th.
And now talking about the economy, you were saying the global economy, we had another worrisome announcement. The first time in 10 months that Japan revised down their economic estimate. What do you read in that?
Yeah, it's definitely alarming. It seems as though, Japan is an export nation. Their economy is dependent on exports. So the slowdown in the United States and the slowdown in China and the situation in the Eurozone, all three have actually, come into play with what's going on in Japan. So I definitely consider that alarming. China, the macroeconomic data coming out of there has been pretty dismal as well. The Shanghai Composite the other night was at like a 3-year low. So, we're also going to be looking closely at what's going on with China. China's already had 2 rate cuts, 3 bank lending requirement cuts. A lot of people are looking for China to do something. However, last week, China already had, it's sort of the lesser degree of their stimulus plan. So the most aggressive is a rate cut. Under that is a bank lending requirement cut. And then under that is these reverse repo swaps. So it's the same idea. It injects liquidity into the system for a temporary amount of time. So they did 220 billion yuan in 7 and 14 day. So I wouldn't expect China to actually do anything until after that 14 days is up as well.
So we can expect potentially 3 central banks intervening. And do you think that can really ignite again the rally? What do you think is going to happen in September?
Well, one interesting thing that I've been reading about is the hedge funds have sort of been sitting on the sidelines. So they have a lot of liquidity, and it seems as though, as the year is going on, a lot of these hedge funds are basically even on the year. And they're going to have to explain to their investors how they missed a massive rally in the market. So from my understanding, from what some of these reports are saying, is that they've actually been holding money on the sidelines, waiting for a big decision to be made, a big move in the market, or a big event. So there's a couple of things coming up. I mean, obviously, we're going to have these dates that we just mentioned, and really they can't wait for a decision on the fiscal cliff, because then the year will already be over by then. So.
The election, anyway, it's in November, and before any decision, maybe on the fiscal cliff.
Yeah, so hopefully that's going to bring some volume back into the market. That's what we're all hoping for. Obviously, the market's it's been sort of like the zombie-like movement. It's anorexic volume to say the least. So hopefully the move by either one of the ECBs will get the hedge funds back into play.
And I wanted to ask you about any eventual convention effect, but of course, the lack of volume is speaking itself by itself. So probably you're not going to see any convention reaction this week and any convention reaction next week. So everything will be maybe waiting for the big polls and the debate.
Yeah, it seems that way. It seems like the Republican convention had a little bit of a hiccup with the hurricane. Well, it's still, I think, a tropical storm, but it's on the edge of being a hurricane, Isaac, down there in the Gulf Coast. So that's not only wreaking havoc on the convention, but it's also holding oil up higher. So that and the situation in Iran. So I really don't think that until we get closer to the election that the events is tied to the election are really going to cause the market to sway one way or the other. There is the potential that if the Republicans look to take office, that it could have a small rally, at least short term, into the markets. The current administration has sort of been anti big business per se, and they've sort of somewhat villainized a lot of parts of Wall Street. So I would anticipate that perhaps if the Republicans come in, at least short term, there might be some sort of rally in the market from that.
Enough maybe to have a rally at the end of the year and finish the year stronger maybe.
Oh, yeah, absolutely. I mean, there are many events that could cause the rally to go up. Obviously, we've already built up to this point on a lot of hopes. So if our expectations aren't met, it could go either way. It should be interesting from here on out.
So now let's talk about this exciting week. Give me some levels.
Yeah, it's been interesting. If you kept in your pocket last week's levels, they're pretty close. So we're actually sitting right up against 1414 as a level on the S&P. Resistance up from here is 1419 and 1423. Down from here is 1407, 14, and then drops down to 1393.
Okay. Probably we're not going to hold our breath this week. Thank you very much, Mark, for being with us.
Thank you.
E grazie a voi per l'attenzione, come sempre domani.